So this is going to be liquidity part 2. Again, this is pretty much the most important concept you're ever going to learn when it comes to trading, whether you're learning it from me, you're learning it from TGR, or whatever. Liquidity is super important. It's the strongest magnet on the chart. You can take really good entries off of it. So we're going to go through a little bit more of liquidity, not only what liquidity is, but liquidity sweeps as well. So what is liquidity? Again, a little recap: an area within the market where a lot of orders are being filled, and more importantly, it's where people are entering and exiting the market. A lot of people are getting stopped out. A lot of people are going, in the direction they think market's going to go, right? So this is a big draw of literal liquidity. Like there's a big draw. There's a lot of people coming in here. So it's important to understand this pretty much in full of what it is, where it is on the chart, how we can use it, etc. So this is a drawn out picture of a liquidity sweep. So liquidity sweep is when price takes out a previous high or low and then reverses in the other direction. So we would primarily look for session highs or lows for this. So those are going to be prominent draws of liquidity in the first place, or session highs and lows, and that is the strongest confluence. So this is a drawn out version of what it is. So we have a previous high get made, whatever, and then we fall down. We then take out this high. So this would be where people are going short, right? So we have a lot of people going short right here. That's why price moves down so much. Then we take them out. So they either took profit down here or whatever. We're not gonna get into that too much. But this is where people are going short. They're betting on the market going down. But what happens when price enters this area? They get stopped out. Price then continues to move up, and they have to buy it again at a higher price. And then it moves back down in that direction. So I take literally, if there's no liquidity sweep, I will not take a trade. So if this does not happen on the chart, if we do not see this, I'm not taking a trade. So obviously I'm going to go in the charts and show you this. This only is a factor on high time frames. This is very important. An hourly or 4 hour at least. I will never take a trade off of like a 15-minute or 30-minute liquidity sweep. That does not exist on my chart. That doesn't exist in my trading strategy. It's not going to work. I don't think it's a strong enough draw of liquidity. I think you can use it kind of as confluence as take profit areas. That's one thing, but taking a trade off of it's another, and that is just not going to be the case for me. So the majority of this video is going to be spent on the charts here, not me yip-yapping. So I'm just going to remove my drawings here actually because there's no trades to be made today. And I'm going to take off of this. So I'll show you guys what this is here actually. So this is called ICT Seek and Destroy profile. I don't use it for the Seek and Destroy method. It's just really easy to see the sessions, right? So obviously, like I can just highlight these sessions and it shows everything. London session, Asia session, New York session. It's already highlighted. Super easy to use. I've been using this for months and months on it. It's super easy. Again, I don't use it for this shit over here. I literally just use it to highlight the sessions. It makes it super easy. But we're gonna move in to these liquidity sweeps. So again, we have a great example of this right here. I'm pretty sure I went short here too as well. I don't know why I took a trade in the afternoon. Okay. Anyways, we are Zen demo trading anyway. So we have a high here. We have actually a session high. So this is super important. Obviously, it's highlighted in yellow. This is an hourly London session high. What did we see? We see right at the start of New York session, we took this high out, right? We take the high out with this candle and move down. We take it out, right? So these are all these people. Hey, I'm betting on the market going short right here. We start moving back down. We come back up, stop them out, and then continue to move lower. So that is literally all a liquidity sweep is, right? So it is super important to mark these areas out before they even happen. So like here would be a great example of this is live right now. So that's like 1 minute or hourly liquidity drawdown here. We didn't quite get that sweep down here yet. Price action today has actually been pretty miserable, so not even surprised by that. But we did have a pretty good example of it during London session / Asia session, where we had damn near equal highs get made, pretty much equal highs. What did we do? We took it out during London session, and obviously on the higher time frames, this looks way smoother. Usually when on the smaller time frames, when it initially sweeps, it won't be the smoothest, but on the hourly, like I showed you, that's about as clean as it gets, is that right there. So you will see this on all the charts every single time, not every time frame really. It won't look as smooth on every time frame, but on the higher time frames like the hourly and the 4 hour, you will see this almost every single time. So we have another one right here. We have, or that's actually technically not a low. Whoops. So we have that example that I marked out right there. We do have this example of it right here. This was a little bit of a delayed one, but obviously we have London session highs right there. We swept them in the first hour New York session, and then we had a huge sell-off right there. Oh, I remember this one here too for sure. Here, I'll get rid of this because the stupid thing's in the way. I don't know how to get rid of it. But we have, or actually I do need to know. Okay, yep, like right here. This was London session high right here. First hour of New York session, we swept it and then moved back down. So this is literally on these hourly time frames. This is super, super important. These are areas where a lot of people are moving into the market. There's a lot of people getting stopped out of the market. Whether it's retail, whether it's big money, right? Big money likes these areas because they know these were previous areas were filled in other banks, and they want to take them out. They want to stop them out, right? So this is super important to understand. Literally, I will go actually in some of my trade recaps and show you guys this. Okay, so this was a good idea, a good a good example of it. This was before I learned market structure shift, so I could have caught a much bigger leg of this, but same concept. So right here on the left, we see we have London session highs / Asia session highs kind of in the same spot right here within a really, really nice bearish order block. So we move over to our 1 minute time frame. We literally catch that exact, and we have this 1 minute bullish for value gap that got disrespected. So we got a complete candle closure below right here, including a break and structure to the downside. So kind of two birds with one stone there. I entered short. I simply wanted to targeted basically right on these lows here and price smash, take profit. So this is a great example of it. Obviously, I implement this in literally all my trades. Again, if I do not see a liquidity sweep to the upside, downside, wherever price is, I'm not going to take a trade because that is a super, super high confluence. And I remember this was when we got a retracement back up here and then kind of complete sell-off. So I remember this one pretty clearly. So again, this was a really good trade. This was like the last actual trade I took on the evaluation account. But again, liquidity sweeps are super, super important. And we're going to do one more video kind of tying up liquidity, kind of tying up a little bit more of what we've gone over, so that way everything kind of makes sense. But it is super important to understand that liquidity is these magnets. Again, we have these highs, we see price push all the way down here. Why does it keep going down? And then we come right back up to these highs and then move back down, right? And we're probably going to target these lows over here. So prices are magnets. Again, it's super important. If you're on like a 1 minute time frame, like I'm on the 1 minute time frame entering here, way up here, do not target down here on the 1 minute. That is a 1 to 30 RR, it looks like. Okay, that's another video we'll go over, is time frames and understanding the difference between them. And it's important that you don't target hourly draws of liquidity when you're entering on the 1 minute or even the 5 minute to an extent. So we're going to go over all that stuff. It's super important, understanding that higher time frames hold higher power. I cannot stress that enough. I remember one day it just clicked for me, and now I've become a much better trader. So that's pretty much it for liquidity part 2.